Hi everyone. In the previous video, we have discussed the Section A's and Section B's of the pre-December 2025 mock. And in this video, we will be discussing the first question of Section C. So before we go to that, we should first understand that Section C primarily consists of three questions. Two questions consisting of 15 marks each and one question of 10 marks. In the 10-mark question, it will mostly be related to income tax planning. And in the other 15 markers, one question will be relating to income tax and the other question will be relating to corporation tax. And these are the three questions that you will be having. So in overall for section C, it would be better to have at least 1 hour 15 minutes or 1 hour 15 minutes categorized only for your section C so that you can include all the calculations and do it at your own pace in a comfortable manner. All right, with this being said, let's move on to the first question of section C. The first question relates to jazz. So the question is, you should assume that today's date is 1st March 2025. Okay. Jazz is a managing director of Malbec Limited and owns 100% of the shares. Malbec Limited has no other employees. Jazz will receive a gross director's remuneration of 35,000. Alright, and dividends of 70,000 from Malbec Limited for the tax year of 24-25, and Jazz has no other income. All right. Next is, after adjusting Jazz's remuneration of 35,000 and the associated employer's national insurance contributions, Malbec Limited has a forecast tax adjusted trading profit of 290,000. Based on these figures, the tax and NICs for Jazz and Malbec Limited for the year ending 5th April 2025 will be: Jazz will have income tax of 25,375 and employee class 1 NICs of 1794. Okay. Next is, Jazz has decided that he should start saving for his retirement. So he plans to make a gross pension contribution of 25,000 before he wants to make a gross pension contribution of 25,000 before the year end of 24-25. Jazz is considering two alternatives. One is Malbec Limited will make a personal pension contribution to the company pension scheme of 25,000. So here one of the option that is being provided is this, though Jazz is making that pension contribution, but it will be considered as an employer pension contribution, and that is one of the option that is being considered. And the second would be Malbec Limited. Malbec Limited will pay Jazz additional gross remuneration of 25,000 for the tax year 24-25, and Jazz will make a pension contribution of 25,000. So in the second alternative, what is happening? The remuneration of director, which was 35,000, will now be receiving an additional 25,000 remuneration, and after which Jazz himself will make a personal pension contribution. So over here, the concept that is being covered is employer pension contributions, while in this point of view, it is the personal pension contribution that is being taken place. All right. So with this, we will try to understand what the requirements are and solve it in a more efficient manner. For each of the two alternative ways of Jazz making a pension contribution of 25,000 or additional director's remuneration, and then Jazz personally making a personal pension contribution, calculate the revised figures for each of the four tax and NIC figures already calculated for the year ending 5th April 2025. So using the two alternate approaches, they want us to calculate these four values. Highlight them in green. So using all the values that have been provided here, we should be calculating these four values. Now let's quickly start off with the question. First would be considering first approach, considering Malbec Limited will make pension contributions on behalf of Jazz. Okay, so this is the first consideration. So for that, we should calculate how will the income tax be affected? How will Jazz's Class 1 NIC contributions will be affected? How will Malbec Limited's employer Class 1 NICs will be affected? And how will the corporation tax be affected? So, because Malbec Limited is making pension contributions on behalf of Jazz, it is considered as an employer pension contribution. And if there is an employer pension contribution, that means it will be considered as an exempt benefit, and because of which it will not affect the income of Jazz. So for that reason, income tax of Jazz Limited will not be affected if Malbec Limited makes employer employer pension contributions. That is because, always remember, employer pension contributions are an exempt benefit and they will not be added to the employment income, and because of which the employment income or the total income of Jazz will not be affected. And because the total income of Jazz is not being affected, the taxable income will not be affected. And because of that, the income tax will not change. Next, coming to the NICs, employee class 1 NICs and employer class 1 NICs. As we all know, employee class 1 NICs and employer class 1 NICs are based on the employment income of an individual. And because of the pension contributions being made by the employer, are the employees' income being affected in any manner? No, they are not. And employee because of that reason, what will happen? Employee class 1 and employer class 1 NICs will not be affected because of Malbec Limited making pension contributions on behalf of Jazz. All right. If you write these 2 points, you will be getting straight up 3 marks for these 2 points, just these 2 points. But now what is happening? So how is the tax but Malbec's corporation tax would be affected? Why is that? Because the tax adjusted trading profit is calculated considering Jazz's remuneration and employers' national insurance contributions. But the pension contributions that are made by the employer is an allowable deduction for corporation tax purposes. So because of that, corporation tax, because of that, corporation tax of Malbec Limited, if it contributes to pension scheme, would be, how would you calculate that? It would be equal to nothing but that would be equal to 290,000, which has already been provided to us, minus 25,000 because it is an allowable deduction. And since it is exceeding the threshold of the 250,000 threshold, the tax will be at the upper limit. So for that reason, it would be 290,000 minus 25,000 into 25%. So this would be the corporation tax of Malbec Limited. So the overview would be, you can literally copy this. Income tax would be 25,375. Jazz would be income tax, and employee class 1 NIC would be equal to 1794. So these both will not change. Now coming to Malbec Limited it would be employer class 1 NICs. It would also remain unchanged at 3574, but corporation tax corporation tax would now be reduced from 72,500 to 66,250, and that is how you will be getting your total 4 marks in total. All right. Now, with this, we can move on to the second approach, where Jazz Limited will get an additional remuneration of 25,000, and then he will make a contribution to the personal pension scheme. Second approach would be Jazz Limited would get would get additional remuneration of 25,000, and then will make contributions to personal pension scheme. This is the conditions that we will be now discussing. So now let's get an overview first. So what is happening because of this case? Jazz is getting an additional remuneration. Because Jazz is getting an additional remuneration, what will happen? Jazz's total income will increase, which means this will affect the income tax. So that is the first scenario. So we know this will be affected, so we'll have to do the calculation for this part of it. The next aspect is, because Jazz's remuneration is increasing, that means the class 1 NICs will also be affected, because class 1 NICs is based on the employment income of Jazz. So because of that, employee class 1 NICs will also be affected. Now, coming to the third value that we will be calculating is employer class 1 NICs. Because the employee class 1 NICs are being affected based on the remuneration, employer class 1 NICs will also be affected in the same manner. So for that reason, this value will also change. Next, because the employer class 1 NIC changes, and because the income also reduces, the tax adjusted trading profit also reduces from 290,000 by 25,000, the corporation tax will also be affected. So if personal pension contributions are made by increasing the remuneration, what is happening? All the 4 values are being affected. So now we will be calculating all the 4 values. What we'll do first would be Jazz's income tax computation. Now, what is happening? There are 2 types of incomes. One is non-savings income, which is based on the remuneration, and the other would also be based on the dividends that they have. So there's 2 types of income. So always present your calculations in this manner: dividend income. So here, remuneration. Remuneration, how do you calculate it? Is equal to 35,000 plus the increase in remuneration is of 25,000. So that is what you'll be taking here, plus 25,000 would be the non-savings income. And the dividend income, would not be changed, and it would stay at 70,000. That would make our total income of that would make up a total of is equal to this plus this, giving a total income of 130,000. All right, let me just paste it here. Dividend income. And 20,000 total would be is equal to this plus this will give you a dividend in total income. All right, this is how you will be calculating it. Now, once you've calculated this, what do we know? The income is exceeding the threshold of 125, 140, which is a threshold that we will be considering when we are calculating a deduction in the personal allowance, correct? So for that reason, what do? We should calculate the reduction in the personal allowance. So for that reason, less personal allowance. How do we calculate that? We will show it on a working one. Total income. How much is the total income? It is 130,000. But what is he doing? How do we calculate our adjustment to personal allowance? It will always be based on the adjusted net income. So how do we calculate adjusted net income? It is nothing but total income less gross pension contributions and less gross gifted donations. Because here we do not have any gifted donations, but there is a gross pension contribution. Gross pension contribution, that is what we'll be calculating. Working one, personal allowance computation. Allowance computation. Now, what is happening from this? If we reduce our personal pension contributions, it is now coming up to a total of minus 25,000. That means our adjusted net income is equal to sum of both of these. So it is 105,000. What is the rule for personal allowance? Personal allowance, if the annual adjusted net income exceeds 100,000, then the excess over 100,000 should be reduced by 50% and thus reducing our personal allowance. So how do we calculate personal allowance, adjusted personal allowance? Personal allowance would be equal to 105,000 minus 100,000 into 50%. So this is a total. How we should calculate the X, how much deduction should be made. Now, how much should from what should it be deducted from? It should be deducted from 12,570 minus. This is how you should calculate it. All right. Always look, if you have a doubt about how much the personal allowance is, you can always take a look at the tax table. These are something that you do not have to remember for a longer period. These values will be provided to you. Like you can see over here, the personal allowance is of 12,570. All right. By doing this calculation, you will be getting is equal to 105,000 minus 100,000. If this is not happening, you can always show it in separate. We can write it as reduced personal allowance, reduction to personal allowance. And here you can show it as adjusted personal allowance. This would be equal to 12,570 minus the value above will give you 10,070 pounds. That is your adjusted personal allowance. So that should be taken here. How do we take it? Always the personal allowance preference should be given to non-savings income, then to savings income, and then to dividend income. That is giving us is equal to minus of this value. Always try to refer your values so that you would not be making any clerical mistakes of copying the value and pasting it there. So the same value should be deducted from here as well, is equal to minus equal to this value, giving us total income of taxable income would be this much, is equal to sum So you're having a non-savings income of 49,930, dividend income of 70,000, and your total income is coming up to a total of 119,930. But now what do we have to consider? because of because of a contribution of 25,000, pension contribution, what will happen? Your bands will increase. So now what is happening at working to adjusted would be would be basic rate will go from 0 to 37,700 plus 25,000 is equal to 37,700 plus 25,000, which means the basic rate band would now be at 0 to 62,700, and higher rate band would be at is equal to 125 140 plus 25,000 to 150,000 140. So higher rate band would be from 62,700 to 62,701 to 150 140. All right, always make a note of the bands, the values of the bands, so that it will help you in your computation purposes. All right. Now our band is coming up to a total of 150, 140. The higher rate band is increased to 150, 140. But our total income is only 199.30. So our total income the taxability will only fall between these two bands, basic rate band, and the higher rate band. Again, whenever you are having doubts about the basic rate band and higher rate band, you can always take a look at this. All right, so now we have computed this. Now let's try to calculate the tax liability. Now what is happening? Our basic rate band is up to 62,700, but our total the non-savings income is only 49,930. So for that reason, it would be at NSI would be is equal to 49,930 in 20%. It would come up to a total of 9986. You can always take a look. Always remember, guys, using the see 20% and 40% and 45% might be easier to remember. But for dividend income, you have different rates over here, different band rates over here. So it is important. If you are having any doubts or if you are unable to remember what the values are, you can always take a look at these tax rates and you can apply them accordingly. So let me keep this here for reference. Now, what will happen for dividend income? We'll be calculating dividends. Dividend income also has a nil rate band. Dividend income nil rate band would be for 500 at 0%, correct? Because for dividend income, the first 500 of the dividend income is always taxed at 0%. So for that reason, it would be 0. Now, how much of the band has been utilized? The band utilized now, the remaining dividend income falling under the basic rate tax would be is equal to, always remember, it would be 62,700 minus 49,930 minus 500. This is a remaining tax because the total band is up to 62,700. Out of this, 49,930 has been utilized for the non-savings income, and the other 500 has been utilized for nil rate band. So the remaining would be calculated as this multiplied by 8.75%. Would give you your value of 1073.6. Now, dividend income taxed at higher rate band. How would that be calculated? We know the total dividend income is 70,000 because there's no personal loans available to it. So first we take 70,000 minus 500. Consider 500. Now, how much of the dividend income has been utilized over here? How do we calculate that? It should always be calculated as a total of is equal to 62,700. This is just a rough work to show it to you guys. You don't have to retain this value. Okay. 62,700 minus 49,930 minus 500. As you already know, it's 500 over here. Minus 500 minus how much has it been? Yes, this will give us 12,270. So 12,270 has also been utilized. Correct? So this should also be deducted over here, giving us a total dividend income of 57,230, which will be taxed at a higher rate of 33.75% into 33.75%. And that is how you will be calculating your total tax liability would now be at is equal to sum total of all of these figures, giving you a total of 30,375 pounds. All right. With this, we have completed computation of the income tax. Now, this is an income tax liability that we have calculated. Next, we can move on to the next part of it, that is employee class 1 NICs. How do we calculate the employee class 1 NICs? Employee class 1 NICs are again based on the employment income. They are not based on the taxable income, but they are based on this figure of 60,000. So earlier when the employee's income was only 35,000, the employee class 1 NICs was 1794. But now the remuneration has increased to 60,000. So how do we calculate the class 1 NICs? Class 1 NICs are very straightforward, guys. You really don't have to remember anything, but you can just take a look at the table and your answers will be available to you here. Like you can clearly see here, the class 1 NICs are first 1 to 12,570 is at 0. 12,571 to 50,270 is at 8%. 50,271 and above is at 2%. So how do you calculate the employee class 1 NICs? 0 to 12,570 at 0%. So it will be 0. Now what do we have next? It is our income is 60,000 but here the threshold is only up to 50,270. So for that reason we should take 50,270 minus 12,570 multiplied by 8%. That is the threshold we have got, is equal to 50,270 minus 12,570 into 8%. We have calculated our value to be 3016. Now, for the remaining amount, remaining at 2% per annum, at 2%. How do we calculate that? Is equal to 60,000 minus 12,570. Similar to what we have done earlier, you can always use it as use a rough work to calculate that. How do you calculate that? Is equal to 60,000 minus 12,570 minus, how do you calculate it? It is 50,270 minus 12,570. It will give you a total of 9730. So that should be included as a part of this in your computation, which will be at 9730 into 2%. All right. This can be the calculation that you should. So total is 60,000. From that, 12,570 is taxed at 0%. And out of this, from that, additionally, how much is being taxed at 8%? It is the difference between 50,270 and 12,570. All right. This will be your calculation. Okay. You do not have to present it. You can always show it here. So you can show it over here itself. Remaining 9730 at 2%. All right, giving you a total class 1 NICs, class 1 NICs to be a sum total of these three values. And that is how you calculate your employee class 1 NICs. All right, now we have calculated what are the values that are being asked for. Income tax liability has been calculated. The class 1 NICs has also been calculated. Now let's quickly move on to Malbec Limited. Malbec Limited. For Malbec Limited, what is the first calculation that's being asked for? Employer Class 1 NICs. This is a pretty straightforward thing because if you take a look at this table, what do you see? Employer for employer class 1 NICs is always at first 1 to 9,100 at 0% and 9,100 and above per year is at 13.8%, which is clearly straightforward. So we know that based on the income of 35,000, it was 3574. But now the income has increased by a further of 25,000. So how do you calculate class 1 NICs? Before before additional remuneration. For additional remuneration was how much? 3574. Employer class 1 NICs on further remuneration of 25,000. Of 25,000, how much is that leading up to? That is leading up to is equal to 25,000 into 13.8%, giving the total class 1 NICs to be is equal to sum total of both these figures. All right, you're getting it, making it a total of 7,024. Simple, because the only on the additional 25,000 is where you will be charging class 1 NICs for the employer. So that is how you're calculating it. And that gives you a total of 7,024. Okay, this is also now calculated. Now it is time to calculate corporation tax. Malbec Limited. Malbec Limited's corporation tax. How do we calculate corporation tax? Corporation tax is nothing but in a very simplistic manner, we will be calculating this. In what manner? What is the forecasted trading profit, forecasted tax adjusted trading profit, adjusted trading profit before the remuneration for additional remuneration. Okay, let's mark it this way. Before the additional remuneration, it was 290,000. From that, we will deduct less additional remuneration because that is an additional remuneration being provided because of which the corporate tax and it is an allowable expense. So because of that, it should be deducted. So minus 25,000. And because of providing this remuneration, what is happening? The class 1 NICs are a deductible are an allowable expense. That means that should also be reduced. Less additional class 1 employers NIC, making it a total of, as we know, this how does this been calculated? Because it has adjusted for only remuneration and associated NIC. So this portion of 3574 has been considered, but this 3450 is something that has not been taken. So that is what will be taken here is equal to minus this value. So now the adjusted trading profit, adjusted taxable trading profit would now be at is equal to sum total of these three, making it a total of 261,550. And again, as we can see, it is above the threshold of 250,000. It would be taxed at 25%. So corporation tax at 25%. Now this would be is equal to this into 25%, making that the corporation tax to a total of 65,388. By the corporation tax is actually reduced because the profits have reduced because of the additional remuneration and the additional class 1 NICs. And that is how we will calculate it. After all the calculations is where we will show an overview. Overview for second scenario. We'll show it here. JAS. Income tax would be income tax. And employee class 1 NICs. How do you calculate that? Is equal to T375 is equal to class 1 NICs is something we calculated as 3210.6. These are the two values. And next, Malbec Limited. Presenting the overview, see, just stopping the answer right here will also give you the marks. But presenting the overview will actually make it clearer for the evaluator to understand how you to understand what are the comparisons you're making over here. So for that reason, it would always be better to show it in this overview manner. Employer class 1 NICs. This would be is equal to 024 and corporation tax would be at is equal to 65,388. And that gives you your total answer. So for second scenario, this is the overview. And for first scenario, as you already seen, this is the overview. All right. If you present the answer in this manner, you will definitely be getting your 10 marks. So for this first part of it, you will be getting 3 marks. And for the second scenario, because it includes all the calculations of income tax, class 1 NIC, class 1 NIC, employers class 1 NIC, and corporation tax, this will be giving you a total score of 7 marks, making that to a total of 10 marks. And this way, we will be completing our first question. And now we will be discussing the second question in the next video. And all the previous questions of section A and section B, you can find it in the tax playlist for the pre-December 2025 mock. All right. See you guys in the next video. All the very best. And if you're having any doubts, you can always feel free to reach out to me. Bye, everyone. Have a good day.